Welcome to the NDIS Property Australia podcast. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hi guys, it's Matt from the office today with Minh, and we're just talking about getting prepared for investing in an NDIS property. So there's a lot of different things to think about when investing in an NDIS property. There's funds, finance, location, the strategy that you're using to invest with, the upgrades that you might want for your house, whether you're going with existing land or a new release of land. But today we're just focusing on funds and how funds are important in getting ready to invest.
Matt, capital is more the key word, I think. So the question that clients always ask is how do I start with a SDA property investment in the NDIS? And we all know that without the cash and capital ready, then it's difficult to get the pre-approval for finance to look at buying property. So it's important for us to talk about what is the costs required for this. I think the important thing is a good benchmark is a 20% deposit for a purchase. On top of the 20% deposit, you have stamp duty as well and other costs. So the question here is, what are the costs required for that? So let's use an example of a $700,000 purchase, for example, right, Matt?
Yep.
Just a round number. If you're doing a 20% deposit, which is a 80% LVR, there's no LMI, lender's mortgage insurance with that. So that's the benchmark we should aim for. You can get LVRs of 90% for SDA NDIS lending with your lender. And there are a few lenders, by the way, Matt, not many lenders out there. I mean, I know Westpac is now in the game.
Yep. Okay. That's news to me.
Bank of Queensland pulled out of NDIS lending. Bank of Australia is more owner-occupiers for SDA properties, and they're pulling out as well. So it's a bit of a slow uptake for banks with NDIS lending. Now, there are other non-bank lenders out there like Mortgage Easy, Mortgage Mart, Granite Home Loans, which does lending here.
Yep.
And we normally tell our clients to go talk to those various different non-bank lenders. But on a $700,000 purchase price, for example, and again, let's assume it's 200 grand land, 500 grand house, so 700 grand there. A 20% deposit would be about 140,000.
Yes.
Stamp duty of about 5 grand on the land, I guess. You need to have...
Yeah, probably 150.
Yeah, at least as a minimum.
Yeah.
But there are other costs that should be taken into consideration. And there's those hard costs, which comes back to cash payments, and the other soft costs, which are included in the bill prices of the packages. So, for example, if you had the fire sprinkler upgrade, that's costing you, 40 grand. That's added to the bill costs. If you had variations to the design of the house to include more accessible furniture,
that would be a furniture package.
Accessible changes to the design of the products, like the kitchen bench tops and bathrooms and hand rails and automation as well. That's part of the build cost, right? So those kind of variations there. And again, let's say variation is about 10 grand, for example, right? That's a soft cost added to the bill price. A sprinkler, fire sprinklers, for example, could be around about 45 grand, for example.
And that's in some states, that's compulsory.
Yeah. So in Western Australia, I'm going off track here, but in Western Australia 2 weeks ago, they imposed fire sprinklers as a requirement for Class 3 residential disability homes. And that's taken some of our clients a bit of a surprise. They've had to cancel their contracts because it's just too costly. And that was about 52 grand fire sprinkler cost, with 7 grand a year ongoing costs as well. So variations, fire sprinklers there, costs added to the bill price, but everything else really is on top of your deposit. So you mentioned 150 before, right, Matt?
Yes.
So on top of that, you need to have costs for interest payments of the construction loan or the block of land during construction. So let's say about 20 grand there on the side. That's a buffer. Provider fees to engage a provider to procure participants for the house. Let's say roughly 20 grand there.
Yeah, probably about 20 grand. Yep.
A furniture package. How much would a furniture package be?
15K.
Yeah, 15K. So white goods, TVs, beds, fridge, washing machine, that kind of stuff. So 15 to 20 grand there. And then stamp duty of about 5 grand on the block of land. So they're the costs there. So 150 already, and then plus the 20 for the interest cost, 20 for the provider, 15, 20 for the furniture, 5K for the stamp duty. But there's one other cost that people don't realise, they forget about, and that is the potential shortfall valuation. So I remember a year ago in the SDA market for lending, expecting a 100 to 200 grand shortfall valuation was quite common for an NDIS investment. But with the lenders being more acutely aware of the commercial income from these SDA properties, they've taken a commercial valuation approach, which reduces the shortfall valuation to 30, 40, 50 grand to maybe as high as 100 grand now. So again, let's assume 50 grand shortfall valuation right there, right?
Yep. So
we have 150 plus that 60, 70. So you're at 200 and a 50K shortfall valuation. So $250,000 right there just to buy a $700,000 property for SDA. Okay. Now, if the valuation was perfect and there was zero shortfall, then we're looking at 200 grand cash requirement.
Yeah, but I feel like investors should still be aware of that in the case that it comes up.
Because if you have a shortfall valuation of 100 grand short, you're going to find 100 grand short somewhere of cash. So, that is pretty much what I wanted to cover with regards to the funds required. So for getting prepared for investing in an SDA property, then you should aim for 250 as a cash amount just for a 700 grand purchase price, which effectively what's 250 of 700 grand? That's about a third, just about 30%.
So ideally, from what I'm understanding, although you're looking at a 20% deposit, you should ideally be looking at around 30% just to make sure you got all your bases covered.
Yes. And some investors, they do want to future-proof their property by spending more, like having a bigger sensory garden, having more automation in the house. And all these changes cost money, right? And you can spend as much as you want, right? But it does cost money to have upfront and ready. Now, this is assuming an 80% LVR, so 20% deposit. There is one or two lenders that do 90% LVR as well. I think that covers it, right? Is there anything more to talk about with regards to funds and capital?
No, I think that's it. Obviously, we'll come back and talk about other topics which are relevant to getting prepared to invest in an NDIS property. So we will touch on other topics. But I think for funds, that generally, for most properties, that's what you need to consider as part of investing. Okay, I think that pretty much wraps up our podcast today in terms of getting prepared on the fund side of things. If you have any thoughts or any questions that you want answered in regards to getting prepared to invest in an SDA property, feel free to give us a call or contact us.
Thank you.
We hope you enjoyed this episode. Please make sure that you are subscribed and following us so that you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this episode with those that can benefit. Until next time, catch you on the next episode.